Welcome back. So the hope and expectation is that we'll start off on the positive side. At least that's what the implied open has been indicating. And there's a bit of green across some Asian markets at least. Let's talk about stocks because it's earnings season full bloom and there are plenty of numbers to go over. Our team is standing by to take you through the CNBC-TV18 list of top stocks to watch for the morning. Guys, morning to all of you. Let's start off with the biggie, Reliance itself. Sonal, tell us all the details in the different businesses.
Well, it was a steady set this time around, Surbhi. If we talk about the revenues, absolutely flat at 2.32 lakh crore rupees. But profits, they came in higher than what the street was working with, came in at 16,563 crore rupees. What did well? It was Jio with supported earnings this time around, led by higher tariff hikes. Full effect of tariff hikes came in this quarter. Profits were up 23%. The oil and gas EBITDA margins also were very strong, came in at 85% versus 72% on a YOY basis. Retail margins slightly saw a better number. However, the growth slowed down here, but the outlook is positive. The O2C business margin, that was under pressure because of the demand-supply situation that we've been seeing globally, and that is the reason why we saw lower margins here. Now, brokerages, they mostly have a buy call on the stock. Jefferies has a target of 3,400 rupees a share. Morgan Stanley has an overweight call with a target of 33.25. They say Q2 EBITDA versus their estimates missed because of weak domestic demand, but profits beat estimates for them this time around. Nomura also has a buy call with a target price of 3,450 on the stock.
All right, Sonal, thank you very much for that. So that's the big one today that will be in focus. HCLTech is the next one we want to focus on. Came out with second quarter earnings. Reema is here with details. Reema, morning.
Strong set of numbers from HCLTech in the second quarter. A revenue beat. The company's constant currency revenue growth has gone up by 1.6%, surpassing street expectation. Margin expansion stands at 150 basis points at 18.6%. This is higher than what the street was anticipating. And the company said that they are seeing improving demand incrementally across various verticals. So BFSI has done very well for them. And therefore, the company has raised the lower end of the FY25 guidance. So the earlier revenue guidance was 3 to 5%. It now stands at 3.5 to 5%. Nomura, Morgan Stanley bullish on HCLTech. They've gone ahead and raised the target price. There are EPS upgrades too. But HSBC and Jefferies have a hold rating. So HSBC says valuations are now in line with TCS, which restricts further re-rating. And Jefferies says they also see limited scope for a re-rating. So their target price stays at 1770.
All right, Reema, thank you very much for that. Actually, you'll hear from the management of HCLTech in a short while from now. So C. Vijay Kumar and Shiv Walia join us at 9:30 to talk about those numbers. Let's talk about capital market plays, right? Angel One reported second quarter numbers. Vamakshi is here to detail that out for us. Vamakshi, morning.
Well, good morning, Prashant. Angel One reported a strong set coming in this time around, especially on the operational performance front. Revenue for the company stood at 1,515 crores. This is an uptick of almost 8% sequentially, largely being driven by an uptick in the interest income, which was up nearly 22% quarter on quarter. When we look at the operational performance, that seems much better, and that is because in the first quarter, we had IPL-related costs of somewhere around 115 odd crores, which are not there in quarter two. So therefore, we are seeing a very sharp improvement. The cost-to-income ratio too has reduced from somewhere around 64% to 52.3%, and resultantly the margins are seeing a very sharp improvement, almost from 33.5% to 44.4%. Resultantly, net profit has also seen an uptick of almost 45% sequentially. This has come in much higher than what the street was working with. A con call is scheduled today at around 11 a.m. We will be watching by for the commentary that comes through from the management, especially regarding the stricter F&O norms, the impact on volumes, as well as the mitigation measures that they will take to mitigate these risks. So overall, when you look at Angel One, it's a slight miss on revenues, but the operational performance more than makes up for it, going with the green for this counter.
All right, Vamakshi, thanks a lot for giving us a quick analysis. Well, let's go hop back across to Sonal. She's tracking Gopal Snacks as well as Sunteck Realty. Sonal?
Well, let me start with Gopal Snacks, tracking it on the back of quarter two performance, which was soft operationally. If we talk about the margins, they declined on a YOY basis to come in at 11.2%, 11.6% versus 12.7%. Profit growth has just been at around 6%. If we talk about the internals, in the two segments, the Ghatia segment has not done so well. At least the growth is slower than the other segment, where revenue growth has been 13.5%, volume growth has been around 16%. But for the wafers business on a low base, it's a strong growth, 46% in terms of revenue. volumes are up 40%. For Sunteck Realty, it was a good operational update. While the other players have been seeing a YOY decline, this company has seen a 33% increase in pre-sales and 25% increase in collections. So looking good for Sunteck.
All right, we'll keep them on our radar as well. Sonal, thanks for that. Let's go back to Vamakshi. She's looking at some more names in the mid-cap space. So which are these stocks, Vamakshi?
Well, good morning, Surbi. I'm looking at Honeywell Automation. The company has secured a contract to provide its airfield ground lighting system for the Noida International Airport. Apart from that, keep an eye out on GIC-RE going with the green for this counter as well, and that is because credit rating agency AM Best has upgraded the financial strength rating to A+, which is A-, which is considered excellent, from B++, which is considered good. They've upgraded the long-term issuer credit rating to A- from BBB+, and AM Best has also revised the credit rating outlook to stable from positive. CESC is the next one I'm watching out for, going with the green because its arm Purva Green Power will be acquiring 100% stake in Deshat Solar Energy. Keep in mind that Deshat Solar is engaged in developing solar PV power plant of nearly 300 megawatt capacity in India. This in turn will lead to expansion of the company's renewable energy business. So on the count of that development, going with the green for CESC. And lastly, let's also focus in on Ramratna Wires. They've approved an acquisition of 60% stake in Tefabo product, and this is for a cash consideration of around 30 crores, which puts the price to sales ratio at 0.8 times. Tefabo manufactures fabricated components and assemblies. It has a very strong presence in renewable energy sector, and many MNCs are already on board as the company's client. So bodes well for Ramratna Wires, going with the green for this counter.
All right, Vamakshi, thank you very much for that. So lots of names with specific news items which we will pay attention to at 9:15 as markets open. Now, oil should be in focus. That's a big one from a macro perspective. 3% cut. Manisha is here to detail that out for us. Manisha, morning.
Hi, morning. Thank you for that, Prashant. Well, yes, it has been a good gain, rather good loss for the crude oil prices. We have seen 2.5% of a decline come in for this one. Well, 3 or 4 factors for this. One, the OPEC has cut the world demand estimates for 2024 and 25 as well. So for this year now, the incremental growth is seen at 1.93 million barrels per day. Almost all other agencies had cut the demand estimates, barring OPEC, which also has come on board now. The second point is the weak Chinese demand and the lack of any new major stimulus that the street was anticipating over the weekend. Well, that reaction came in on Monday and overnight as well. The third is that Israel says that as they strike Iran, it would only be Iran military and not the nuclear or the oil facility targets. Now, that has taken a bit of a war premium off the prices also. There are various reports suggesting now that fourth quarter, if there is no escalation, that the crude oil prices can come down all the way down to 75, which we're trading right now, and all the levels, and to a level of 72 to 70 on the lower side as well. But if there is escalation, then from Bernstein to Citi to Bank of America are not ruling out $100 on the higher side as well. So for this quarter, it's a very, very big range that these banks and brokerages are playing with in terms of crude oil.
Okay, all right. Thanks for that, Manisha. We'll watch out for a lot of the crude oil sensitive stocks as well in trade today. Let's quickly recap our list of stocks to watch. The ones that have positive news flow are Reliance Industries, HCLTech, Angel One, Sunteck Realty, Honeywell Auto, GIC-RE, Ramratna Wire, and CESC. Gopal Snacks is the only stock really that may open out in the red on the back of numbers. And then, of course, we'll keep all the crude sensitives like tire companies, paint companies, and, of course, oil marketing companies on our radar as well. Quick break on that note. We'll come back on the other side and connect with Devan Choksi of DR Choksi FinServe and get some fundamental stock analysis going.